Welcome to Bauhaus Weekly Wrap-Up, Week 22. This week at Bauhaus, Week 22, brought a whirlwind of economic signals, market highs, and geopolitical sparks. From cooling inflation to a tariff tug-of-war, here's what moved the markets, rattled the headlines, and shaped the financial landscape from May 26th to May 30th. Let's dive into the key developments from the markets, the Fed, and around the world. The Federal Reserve's message was clear. Inflation is cooling, but trade tensions are making policymakers cautious. Steel tariffs dominated the headlines. A legal tug-of-war between the courts and the White House over 50% tariffs left businesses on edge. The April PCE inflation data showed real progress, slowing to 2.1% year-over-year, the closest to the Fed's 2% target in years. Markets responded with mixed emotions. The S&P 500 had its best May since 1990, but gave back some gains as tariff uncertainty grew. Globally, OPEC plus production talks and geopolitical headlines from the Middle East added to the uncertainty. Federal Reserve Watch San Francisco Fed President Mary Daly said progress is being made, but the Fed isn't at its 2% goal yet. Other Fed officials echoed caution. Chicago's Austin Goolsbee warned that tariffs can add to inflation and complicate rate decisions. Philadelphia's Patrick Harker and Boston's Susan Collins confirmed that disinflation is real, but cutting rates will require stronger evidence. All eyes remain on the incoming data. Trade and tariffs. It was a dramatic week for trade policy. Last May 23rd, the Court of International Trade ruled most of former President Trump's tariffs illegal. Then, on May 29th, an appeals court temporarily reinstated some tariffs, creating whiplash for businesses. Also, last May 30th, Trump announced a plan to double steel and aluminum tariffs to 50%, effective June 4th, citing national security. He also celebrated a $14 billion investment from Japan's Nippon Steel in U.S. steel. For businesses, the fallout is real. Gap Inc. warned of $100 to $150 million in extra costs, while Costco said margins could tighten despite strong sales. The S&P 500 saw its best May since 1990, up around 5%, before retreating slightly due to tariff concerns. The Nasdaq posted its best May since 1997, powered by strong AI and tech earnings from names like Nvidia, Zscaler, and UiPath. On the flip side, retail and travel stocks struggled. Gap was hit by tariff concerns, and Airbnb faced softness heading into summer. Bond markets were volatile. The 10-year Treasury yield rose to 4.43% before easing after the inflation data. Fed funds futures now show only a 30% chance of a rate cut before September. In currency markets, the dollar index pulled back to the 101 to 102 range. The euro traded near 1.09 to 1.10 as the ECB signaled a June rate cut. Gold and oil traded in tight ranges, reflecting a mix of safe haven demand and steady supply dynamics. In Ukraine, Russia called for a ceasefire and negotiations, while President Zelensky proposed a four-nation summit to explore a path to peace. Tensions flared in the Middle East as Iran rejected Trump's comments on targeting nuclear sites. Meanwhile, Western powers are drafting a UN resolution over Iran's compliance. In Asia and Europe, Tokyo inflation rose to 3.4% year-over-year, while China's BYD outpaced Tesla in European EV sales for the first time. The ECB signaled readiness to cut rates on June 5th, despite sticky German inflation. To summarize, the final days of May reminded us how quickly policy shifts, legal rulings, and global events can shape the economic landscape. But through the noise, the signals are clear. Inflation is easing. Tech continues to drive growth. And with focus and adaptability, we can all navigate the ups and downs. What's your strategy? Drop your insights in the comments below. And as always, stay sharp, stay curious, and above all, stay Bauhaus. Like, follow, and subscribe to our social media channels for more market insights and analysis.